All right, good morning, everybody. Welcome, and thanks for joining our Smart Beta question and answer session. My name is Joe Sullivan. I'm a director here of Manager Relations at Interactive Brokers Asset Management. Today, I'm here with our Chief Investment Officer, Sanjoy Ghosh. Sanjoy is also the creator and portfolio manager for the 11 Smart Beta portfolios that Interactive Brokers Asset Management offers. So a little background on the company. IB Asset Management is part of the Interactive Brokers Group, an electronic brokerage firm that operates in 24 markets around the globe and has about $6 billion in equity capital. Sanjoy and I are both based in beautiful downtown Boston's financial district. So today we're here to discuss Smart Beta, which is a relatively new area of investing. We will answer some of the questions that we get most frequently from advisors and the investors that are interested in learning more about Smart Beta. And Sanjoy will respond to some of the questions we received earlier as well. I also encourage you to ask questions during the webinar. So you can do this by, you could submit questions by typing your question in the questions box, the GoToWebinar dashboard, and clicking send. Of course, you can email us after. Our contact information will be available. So if you don't have, if I don't get your questions during the presentation or Q&A session, we will follow up with you by email. And you're always welcome to contact us, of course, directly by phone, email, or chat. So let's get started. So I'm going to give a little background and introduce Sanjoy Ghosh. So Sanjoy has a PhD in finance from the Wharton School of Business at the University of Pennsylvania. One of his areas of expertise is multi-asset portfolio construction. So before Sanjoy was here, he was a quantitative analyst at Putnam Investments in Boston, and he was in Putnam's portfolio management team. He was also a director of investments and portfolio manager at Panagora Asset Management, also located here in Boston. At Panagora, Sanjoy oversaw alpha research for equity multi-asset strategies. He was also a member of Panagora's investment committee and led the new investment product portfolio development for several of the firm's products. So Sanjoy, to start with, for our guests who are just learning about this area of investing, why don't you begin by defining beta, and then we'll get into what Smart Beta is.
Thanks for the introduction, Joe. So the question is, what is beta? As most of you know, beta is the exposure to equity markets, and you get this by passively holding a diversified basket of capitalization-weighted stocks. What I mean by capitalization-weighted is that it's a stock market index whose components are weighted according to the total market value of the outstanding shares. For example, since the S&P 500 is a passive index whose weights are determined by capitalization, holding the S&P 500 would equate to a beta exposure of 1 to the US equity markets.
So what is Smart Beta then?
Sure. Okay, so Smart Beta, there's a twist, is there's exposure to equity markets by holding a diversified basket of stocks, but in this case, we assign higher weights to stocks that are based on certain factors that the manager deems to be desirable. Of course, Smart Beta, you might have heard it by some other names, for example, factor investing, enhanced beta, alternative beta, as well as strategic beta.
Great. So one of the questions we get frequently from clients and advisors, investors, so why would I choose Smart Beta over a beta product?
Oh, sure, that's a great question. So the question is, why Smart Beta? Number of reasons. First, you have investing in passive cap-weighted indices, which is beta investing, means that you have an implicit belief that high capitalization stocks is the way to go because high capitalization is the most desirable characteristic that a stock can have. Now, cap weighting, while it does have its merits, such as being more liquid, easier to trade, typically has lower turnover, but it's also got its downsides. For example, stocks that might be bubble stocks. What do I mean by bubble stocks? These are stocks that have had dramatic price appreciation within short intervals of time, well, these bubble stocks end up getting a much higher representation in these cap-weighted indices. I'll give you an example. Tech stocks were a large part of the S&P 500 before the tech bubble crashed in the year 2000. Similarly, financial stocks were a large part of the S&P index before the crash in 2008. So what you find is that beta exposure, or being exposed to high capitalization weighted index, gives you very high exposure to bubble stocks. On the other hand, academic and practitioner research has found that factors such as value, such as growth, such as quality, provide positive excess return over the long run over cap-weighted beta indices, which would be one of the reasons why investing in smart beta makes a lot of sense.
Okay, so as you mentioned those, so these are a lot of the factors you use to create the smart beta portfolios here at IB Asset Management. Can you go a little bit in depth into those products?
Sure. So the question is, what smart beta products do we offer? Currently, we offer 11 smart beta or factor-based portfolios. As you see on the slide, you've got the broad market, you've got dividend, you've got growth, you've got value, and all of these are offered both in a small cap as well as a large cap version. And then you see tax managed, and this is offered in the large cap version. One thing to keep in mind is the way in which we offer these products. Interactive Brokers Asset Management uses a separately managed account structure. This is also known as SMA. And what this structure allows you to do is to see your live holdings and tradings in each of your portfolios. So I mentioned separately managed accounts. So one question is, what are the benefits of this structure over the more commonly used exchange-traded funds or ETFs? Well, let me go into what the SMA does allow you to do. The SMA is nothing else than just a portfolio of individual securities that are managed for you by an asset management firm. So you end up directly owning the securities in the account. By directly owning these securities, it gives you certain benefits. And these benefits include transparency and being able to control purchases and sales of these securities. On the other hand, ETF shareholders do not directly own the underlying investments in the fund. So that's a big difference between the SMA structure and the ETF structure.
Okay, so we just got a question here. So what does the advantages of our products at IB Asset Management have over investing directly into an ETF? As you know, we see plenty of smart beta ETFs available out there to investors.
Oh, sure. So there's several potential benefits investing in smart beta in this SMA structure over ETFs. Firstly, the investment minimums are very low. It's only $5,000. Secondly, the fees are extremely competitive. It's 8 basis points. What I mean by that is it's 0.08%. And what that translates to for a $5,000 investment is just $4 of management fees a year.
Wow.
So very attractive management fees. Besides for this, you also have transparency. This is a big benefit. Clients can log into their customized dashboard and see their positions, trades, and performance online anytime. So this level of transparency and this level of dig down is possible only within an SMA structure. Another thing that you can see is, we provide a variety of details on the portfolio. For example, you can see performance metrics, risk metrics, and you just click on the portfolio name, and a huge amount of information becomes available for you to sort of judge how good the portfolio is.
So the smart beta portfolio utilize something called a fractional share. A lot of people may not be familiar with fractional shares and how we utilize them for these products and SMAs. Can you touch on that a little bit?
Oh, sure. So fractional shares, relatively new concept. One of the big features of fractional shares is that it lets you invest in a broad basket of stocks with a low investment minimum. And it allows you to do so because it lets you buy a fraction or a part of a share. So let's take our smart beta portfolios as an example. Several of our smart beta fundamental portfolios have 300 stocks. Our broad market portfolio has 1,000 stocks. And what fractional shares allows you to do is to invest in these portfolios irrespective of whether you're investing a large sum of money, let's say $5 million, or a small sum, in this case, $5,000. One thing to keep in mind is that fractional shares don't trade in the open market, and consequently, in order to buy and sell these fractional shares, you do need to provide consent.
So we have a question here. Can you just maybe talk a little bit about the background about how you and the investment management team here set out and constructed these models?
Oh, sure. So that's a very important question. Portfolio construction. How do you construct these portfolios? The investment management team here, and we did extensive research. We did extensive backtesting to finally decide on a set of fundamental factors and a set of final rules that we use to construct each of these portfolios. Our rules-based investment approach, and this is very important, the entire process is very rules-driven. It's extremely disciplined. What this approach does is it allocates higher weights to stocks that have certain characteristics that we think are desirable. Let me give you an example. The value fundamental smart beta portfolio, for example, it's based on the idea of buying stocks with attractive valuation ratios. What we do is we rank each stock in our universe based on certain valuation ratios. These are proprietary valuation ratios. And we use these ranks to pick and weight our investments. To control the risk of the portfolio, so that's about how do you assign weights, but then there's an additional layer that we do. We control the risk of the portfolio. And we do that by penalizing high volatility in stocks, and we also avoid sector concentration. And we repeat this process and adjust the holdings every quarter.
All right, so let's talk about the process repeating each quarter and the adjustments and the rebalances. We often get questions this. Does the market dictate how you make these decisions at all?
As I mentioned, we follow an extremely disciplined approach. So that's a one big takeaway, that this is, it's a process, it's a disciplined process, and we think that applying this kind of discipline in our quarterly rebalancing is one of the best tools that we have to outperform the index in the long run. So we apply this approach rather than overreacting and trading each time there's a market up or a downturn. So again, it's a disciplined process that repeats itself quarter after quarter. One thing to keep in mind, of course, is that trading does incur transaction costs. One thing to keep in mind is that we trade through Interactive Brokers, our affiliated broker-dealer, so that's something to keep in mind. The other thing, of course, is that Smart Beta, as I mentioned, very diversified products. There has a large number of stocks. There are going to be a large number of trades when we rebalance each time, and so there might be tax reporting burden, and this is something that you should consult with your tax expert.
So another question we have here, do all of the IB asset management portfolios rebalance quarterly?
That's a great question. As you can see, if you explore our site, is that we offer both Smart Beta portfolios as well as other actively managed portfolios on Interactive Brokers Asset Management Marketplace. And when I've been talking about quarterly rebalancing, that refers only to the Smart Betas. If you want to see how the other portfolios trade, you can click on the portfolio description. Just go to the marketplace, click on the portfolio description, and you find out a great deal of detail about how the portfolio manager allocates, how they have execute sell disciplines, and there's a lot of other information that can help you make an informed choice.
Okay, do you want to talk about all the information that's available in the portfolio details page?
Sure. So, if you look at, the slide that's up right now, this is information about the growth portfolio. There's information about the background research that we did, how we go about thinking about creating this portfolio, the allocation discipline, which is portfolio construction, which I've touched upon, sell discipline, which is again something we touched upon through the discipline quarterly rebalancing. There's more information on this page. You've got the management fees, which we mentioned was 8 basis points, the minimum investment, which is $5,000, and if you actually scroll down to the next slide, what you'll find is there's a lot of performance metrics, risk metrics. One thing to keep in mind is that the performance information that we display on this page is that of the portfolio manager's account, and it's provided net of fees. Again, these are not the actual performances of any client. If a client wants to see how they've done, they can actually log into their IB asset management account, go to their customized dashboard, and find performance. One interesting thing about this page also, the way in which we present performance, is you can actually customize how you look at performance by changing the shifter around. You can decide on exactly what time frame you want to look at returns over.
Great. Lots of detail available there. So far, let's stop right here. So we've covered several benefits about the smart beta portfolios. Obviously, low fees, full transparency, diversification you'll get out of these products. The low investment minimums are available because the utilization of fractional shares, and of course, automatic rebalancing we think is a great tool. Looks like we have a few more questions here. So let's cover this. So we have some questions which we thought we would around the pricing and the management fees here. So I'll just reiterate, the management fee for every single one of these smart beta products, all 11, is 8 basis points. That's 0.08%. And again, the minimum on these products is $5,000. Sanjoy, do you want to touch on this slide that shows us compared to some of the other ETFs and competitors also doing smart beta?
So this is just a comparison of management fees. As Joe mentioned, 8 basis points is extremely competitive in the marketplace. Here we've listed some ETFs, exchange-traded funds, which have garnered significant assets. These are ETFs provided by iShares, for example, PowerShares, Vanguard, and others. As you can see, 8 basis points is extremely competitive when you compare it to the management fees for these products that are listed on this page.
Great. So here's another question, very good question. How do I buy it? So this is from an advisor in Oklahoma. He's wondering how to buy these for his clients. So first thing you would do is you log into IB account management with your advisor master account. Then locate the IB asset management card in the money manager section of the IB marketplace. Then click the blue link button at the bottom of IB Asset Management's listing. You'll then electronically sign our sub-advisory agreement with IB Asset Management. We'll review the link request, and then you'll actually hear from us to complete the process. One thing I do want to just point out, how relatively easy it is to buy and sell the holdings of the smart beta portfolios, including the fractional shares. But we do have an exception of a few timing restrictions to comply with regulations. So I want to put out to adhere to these regulatory requirements. We're not going to let you make clients allocated in any initial additional reoccurring investments to smart beta portfolios 3 business days prior to the date of our quarterly rebalance. So if a client or a advisor requests a transaction during that time period, that blackout, it's going to be sent for execution the first trading day following the rebalance, and that's to protect you and your clients. So here's my contact information. Let me see if we have any more questions here. Sanjoy, how many portfolios can a client invest in at one time on the platform?
Sure. So we offer dozens of portfolios in our marketplace. Smart Beta is also in our marketplace. In order to invest in a portfolio, you have to have an appropriate risk tolerance score. What I mean by that is clients fill out a risk questionnaire, get a risk score, and their risk score must be sufficient to invest in the portfolio. In addition to the risk score, the subset of portfolios that clients can invest in is determined by the kind of brokerage account you have. For example, certain portfolios require margin requirements. Certain portfolios which trade in options, for example, require the client to have options permissions. But assuming that you have sufficient risk score and you have the appropriate permissioning, you can invest in as many portfolios as you like that are available in our marketplace.
Okay, great. One question we have on the line here is, do these go long short? Are they long only?
These are long only portfolios.
Okay, great. So I think all the time we have here today. We have one more question from John in Boston. What's your favorite pizza in Boston?
It's actually a lunch truck that we have right outside.
Okay.
And it's called Stoked.
Oh, wow, all right. All right, we'll have to feed them for that free advertising. So thank everyone for joining here today. My contact information is on the slide here. If we didn't get your questions, we're going to email you, but feel free to contact us. My email is joe@ibkram.com. And any information, as we showed you the detailed manager pages for each portfolio, you can visit us directly at ibkram.com. So thank you so much, and we will talk to you soon. And thank you for Sanjoy for joining us.
Oh, thanks everyone.